Silver just did something it has failed to do for weeks. In Friday's session, it jumped almost 3% and pushed clean through its 50-day simple moving average at $62.13. If that term is new to you, the 50-day SMA is simply the average closing price over the last 50 trading days. It is a rough measure of who has been winning, buyers or sellers, over the medium term. Clearing it matters because for weeks silver was trading below that line, which told you sellers still had the upper hand. As of today, Saturday, August 8, 2026, that has flipped. Price is now sitting in the low 60s and the conversation has shifted from defending support to attacking resistance at $65. To understand the breakout, you have to look at where silver came from. On March 8, 2026, the metal printed a low of $56.57, the bottom of a $55 to $57 support zone that buyers had been defending. That defense held, and the recovery built from there. But the climb was not smooth. Midweek, a rebound in the US dollar put real pressure on silver ahead of the American jobs report. That relationship is straightforward. Silver is priced in dollars, so a stronger dollar makes the same ounce more expensive for buyers holding other currencies, and demand cools. Once that dollar bid faded after the data, the break came off. The move through $62.13 was not random momentum. It was the release of pressure that had been building for days. So what does this actually change today? For traders, a close above the 50-day average shifts the default position from selling rallies to buying dips, and that alone can become self-fulfilling as stop losses get moved and short positions get covered. For long-term holders, context matters. Even after this bounce, silver remains well below the record high it set back in January, so this is a recovery within a much larger correction, not a fresh charge into new territory. For industrial buyers, and remember silver goes into solar panels, electronics and electrical contacts, a firmer price means procurement costs are climbing again just as they had started to look comfortable. Silver mining shares tend to amplify these moves, rising and falling faster than the metal itself. Here is the honest picture on what comes next. The 50-day break is encouraging, but analysts are pointing at $63.30 as the level that genuinely confirms a trend shift. Silver has bumped into the $62 to $63 region before and turned back, so one strong day is not proof. A decisive break and hold above $63.30 opens the door to $65, and beyond that the $65 to $70 zone comes into view. The downside case is just as clear. If price slips back beneath $62.13 and the breakout fails, that becomes a bull trap, and the $56.57 August low returns to the table. Watch the dollar, because it has been the deciding factor all week. The single thing to remember is this: the 50-day SMA got silver into the game, but $63.30 wins it. Breakouts are only meaningful when they hold, and confirmation beats prediction every time. Treat $62.13 as your line in the sand and $63.30 as your green light. Nothing here is financial advice, so size your risk sensibly and let the price tell you whether the bulls really mean it.